Welcome back. It's your girl Candace with a K. Welcome to Channel GAM. I am a HUD counselor, and today we're going to talk about the most common ways to finance a home using conventional loans. So if you're considering buying a home soon, understanding conventional loans is very crucial. We'll discuss today the pros and the cons, explain the different rates, and share tips to help you navigate through this process with confidence. So you may ask, what is a conventional loan, Candace? And what I will tell you is a conventional loan is a mortgage that isn't insured or guaranteed by the federal government. It's often issued by private lenders, such as a bank or a credit union. These loans typically require you guys to have a higher credit score and put down a larger down payment. Unlike the government-backed loans such as FHA or VA that don't require a lot of those same requirements that conventional loans require. However, they still are one of the most popular options for us home buyers. So typically with conventional, you need at least a 620 credit score. Some lenders do require more. So definitely do your research on that end, and also always shop around when you are looking at requirements. Now, let's see some advantages of going with a conventional loan. They typically will have a lower cost in the long run of things. So that means no mortgage insurance if you are going to put 20% or more down. And then with a conventional loan, there's typically more flexibility when you are trying to get a loan for different type of properties, such as a primary residence, a secondary residence, vacation homes, rental properties, investment properties, new construction, and even distressed properties. Also, another advantage is that conventional loans offer a fixed rate. So you can lock in a fixed interest rate for the life of your loan, which means it's going to be stable monthly payments, as in the principal and interest part. Now, we all know from the previous videos, your taxes and insurance will fluctuate. So some of the cons on the flip side that you guys do need to be aware of, you're going to have stricter eligibility requirements, as in higher credit scores, larger down payments are typically required, especially if it's not your first home or you consider a first-time home buyer. Mortgage insurance, if you put down less than 20%, you will need to find a private mortgage insurance company for that PMI, which adds to your monthly payment. And higher interest rates for some buyers. Depending on your credit score and financial profile, you might not even qualify for the best rates. Let's dive deep into fixed versus variable rates. So, a fixed rate on a conventional loan means your interest rate stays the same for the entire term of your loan, whether it's 15 years or 30 years. This makes it a lot easier when you guys need to budget those payments. This will make budgeting way easier since your payment will remain the same. So with variable rates, known as an ARM, and an ARM means adjustable rate mortgage. So if you ever see ARM, it's adjustable rate mortgage. So now with the ARM loans, your interest rate can change after the initial period, typically 5, 7, or 10 years. The rate starts lower than a fixed rate, but can increase over time, which your monthly payment can go up. So if you ever ask yourself, well, which one is right for you? Fixed rates are great for stability, but if you plan on selling or refinancing before the adjustable period kicks in, an ARM might just help you save in the short term of things. So you want to just look at the overall picture of where you and your family stand and see. So if you are purchasing a house and you know that you, with your job, you relocate a lot, an ARM loan may be great for you. But if you know you're not going anywhere and you are on a tight budget, you may want to go into that fixed loan payment schedule. And if you have any other questions about the ARM, I can definitely make another video to talk about that as well. So let's go into the top 3 tips that I want you guys to consider when choosing a conventional loan. The first tip, get your pen and piece of paper. I need you guys to know your credit score and how to improve it if it's not at least the 620. So remember, conventional loans typically require a higher credit score than our FHA and our VA loans. But the better score you have, the more favorable your loan terms will be. Take the time to check your credit score and fix any issues before even applying. Number 2, save for a large down payment. If you feel like you're going to be living in this home for those 30 years, you might as well put a larger down payment to save on the principal and interest in the long term. So the larger down payment you put, also the lower your monthly payments will be and the better chances of avoiding that private mortgage insurance as well. You can definitely try to aim for 20% or more on your down payment, but even 10% can help you secure a great deal on that mortgage payment. Number 3, the third and last tip of the video. Please, y'all, shop around and compare lenders. Just because you bank there doesn't mean that they have the best option for you and your family. Not all lenders have the same terms, so make sure y'all shop around. Compare those interest rates, the fees, and the loan terms before committing. And also make sure your lender that you guys do choose is experienced in handling conventional loans. Some of them don't know how to handle it, which I still find is a little bit weird because we are in 2025. All lenders should know how to work a conventional loan, but that's to each his own. To sum up everything that we just talked about, despite the requirements, conventional loans are often the best choice for those with strong credit and the ability to make a larger down payment. They offer flexibility, lower long-term costs, and a sense of security with those fixed rates options. So I encourage all of you guys to purchase a home, and when you do, I recommend conventional if that's the right fit for you. So with preparation and planning, like I said, a conventional loan can be a fantastic way to achieve home ownership. So to sum it up again, conventional loans are a great option for many of you guys. They have its pros and cons, but with a little planning, you can take advantage of those benefits, especially if it's your first time home buying as well, and you fit in a certain area median income. Remember last video, you would save money as well. If you are ready to start that home buying process, guys, I want you guys to do your research, watch tons of video, ask tons of questions, reach out to your nearest HUD counselor. That can be me if you are near me. If not, I'm able to guide you to the right person. So make sure to like, comment, subscribe on this video, and also share this. And leave a comment below if you have any questions or if you are ready to start your home buying journey. I'd love to hear from you all. Thanks again for watching Candace with the K. That's me. And tuning in to Channel Yam. I hope my dog's in the background and Mr. Harper was not too loud today. Bye, guys. Every single thing you do, you